Salesforce stock has been struggling in the stock market over the last few months. So today I thought it'd be a great idea to see if the numbers support that bearish view, or if perhaps we can take advantage of the bearish movement over the last few months and invest in a company before sentiment turns back positive. But as a quick disclaimer, I do want to make it clear that I personally do own CRM stock. I am invested in Salesforce. I invested in it about a year ago. And my investment is currently flat, so it's not like I've made millions of dollars on Salesforce at this time. But I do want to make it clear before we get further into the video that yes, I own this stock, but all of the opinions I express will be unbiased. The numbers are the numbers. I'm not going to fudge them or anything. Obviously, you can double check those numbers anywhere. And as always, do not invest in something because I'm invested in it. Please do your own due diligence. So with that, let's get into the video. So as always, we'll do a brief overview of the company, and Salesforce is a CRM application company. CRM stands for Customer Relationship Management, and essentially it's a application that runs on computers, and it allows businesses and employees within those businesses to keep track of their customers, do all sorts of different things like relationship management, advertising management, databasing, etc., etc. And so the big push for Salesforce, much like any other technology company, is incorporating AI into their products. So if you research Salesforce, you will see a lot of talk about this Agentforce, which is their AI enhanced CRM, which the company has just started rolling out to its customers within the last year or two. Now, I found this headline from Investors Business Daily that does a decent job of just quickly explaining why Salesforce has this bearishness in the stock market right now, and it's generally due to the sales outlook falling for the company even as they are rolling out their AI. So Wall Street in general is just worried that, number one, Salesforce's main sources of revenue are being affected by AI, and number two, Salesforce's answer, which is their Agentforce AI, is simply not bringing in enough revenue right now to make up for the losses in revenue growth elsewhere. Now let me be clear, Salesforce is still growing as a company, but that growth is decelerating, and that is why Wall Street is worried. So as always, before we get into the numbers, please take a moment to like the video and subscribe to my channel as I make videos like this all the time, and leave a comment down below letting me know what you think about Salesforce, or letting me know if there are any stocks that you would like to see analyzed. Thank you so much for making it to this part of the video, and let's move into those numbers. Salesforce's earnings statement looks very healthy, with revenue growth at 17% per year over the last 5 years, EBITDA growth at 36%, and free cash flow growth at 21% per year. But if we take a look at all of the different shaded regions, we can see that there is a distinct slowdown in the growth, in this case in revenue, in free cash flow, as well as in EBITDA. So that, again, is where Wall Street is getting a little bit worried. Margins do remain super healthy, though, at 77% for the gross margin, 21% for operating margins, and a 35% free cash flow margin. And we have seen a huge spike in the operating margin from 2020 into 2025 for Salesforce. So that, I think, is a really good sign. The other two margins have remained quite steady, which you would expect for a fairly mature software company. Assets easily outweigh their liabilities, and the company has a strong quick ratio and current ratio, so I see no issues with Salesforce's balance sheet. In fact, this chart looks pretty weird because the company makes so much money from its investments that its investment earnings cover all of their interest expenses, leading to an interest coverage that is basically infinity. Now, Salesforce has not been a major buyer of its own shares over the last 5 years, actually expanding its shares outstanding by about 1% per year for the last 5 years. Although I do want to point out that growth in shares outstanding has come from 2020 until 2022. And since 2022, the company has started buying back shares. So it remains to be seen how long that trend will continue, but it appears that Salesforce is at the very least becoming more shareholder friendly. The company also started paying a dividend back in 2024. So we do not have 5-year dividend growth information, but the dividend is very strongly covered at nearly 9 times. Salesforce trades at a 6 times price to sales, which is a 16% discount to its 5-year average. Price to earnings trades at a 67% discount, although this is heavily influenced by the fact that Salesforce's diluted earnings in 2022 and 2024 were very low for different reasons, so that does skew the data very heavily here. But price to EBITDA does show a significant improvement, currently trading about 21 times and a 43% discount to its long-term average. Price to free cash flow trades at a 21% discount. And Salesforce's price to book is about the only place we're going to see any fair value, with it currently trading at just a 2% discount, so basically at fair value versus its 5-year long-term average. Enterprise value versus EBITDA again shows a similar discount of about 45%, and enterprise value to free cash flow, again, similar to its price to free cash flow, has a discount of 22%. Salesforce has a current dividend yield of 0.66%, which if you compare that to the average, which is calculated over the last 5 years, that includes 3 years of no dividend payments. That would come to a dividend that is nearly 3 times higher than its long-term average. But if we take into account just the last couple of years, Salesforce's average dividend yield is about 0.5%. So it is still trading at a decent price on a dividend yield basis, though not nearly as strong of a price as this chart might make it appear. Salesforce is currently in a 32% drawdown, and if we take a look at the last 10 years, this 32% drawdown has really only ever been exceeded once back in 2022 during that bear market, and with that exception, we only see drawdowns hitting that 30% threshold for Salesforce. So this is an area from a drawdown perspective where Salesforce might be reaching peak bearishness, unless of course we see a broader market pullback or something really shocking happen to the company in the next quarter or two. CRM's earnings estimates are very steady over the last 6 months, so there's not a lot of nuance that I can show here other than the company is expected to earn $11.36 in 2025, and that number is supposed to continuously increase at a fairly steady pace over the next few years. Those earnings numbers would imply a forward PE of 21.75 for this year, all the way to a 17 times forward PE for 2027. Now, this chart shows that well below the average PE of 110, but again, that is skewed because of some fluctuations in diluted earnings per share for Salesforce over the last 5 years. But in any case, a 22 times forward multiple for Salesforce is fairly low, suggesting that the stock may be a decent deal. And then, as always, ending the analysis, taking a look at our X factors, we can see Salesforce has a 5-year expected growth rate of 17% per year. So that is excellent. That does outpace the broader market. The company has a PEGI ratio of 2, which is not great and is certainly skewed by the high price to earnings ratio that CRM trades at due to accounting and how diluted EPS is calculated. But if we analyze Salesforce on the FG ratio, which again is the EV over free cash flow as a ratio, and then we divide that over its long-term total return, which is its expected 5-year growth plus its dividend per share, we get a number of 0.93, which is below 1, and anything below 1 is considered an excellent deal, as long as earnings estimates play out the way analysts expect, I should add. And so for our final review of the company, Salesforce gets a really solid final score of 12 out of 15. I gave it a 3 out of 4 for safety because I do believe that the company is incredibly safe in the near term, although it does face some potential AI disruption risks, so I can't give it a perfect score. On the quality front though, Salesforce is the #1 CRM software in the world, and it is used by hundreds of the world's largest companies. So as a software company, you don't get that big and that universal without having a quality product. The company's balance sheet is also really solid. They have great free cash flow. Their margins continue to grow. So all in all, just a very strong company. For value, I rated CRM a 3 out of 4. Now, the reason it gets a 3 is because very obviously Salesforce is trading at a discount to its 5-year average price to earnings, EV to free cash flow, EV to EBITDA, just about everything we saw with the exception of price to book. But even with all of those discounts, I don't believe the discount is so high that it is just outrageously cheap right now. Salesforce is going through some issues. I believe it'll get through those issues just fine. And that bearishness has presented a strong opportunity to purchase a really good company at a decent price. And so finally, we go on to the X factors where Salesforce gets a 2 out of 3 for the growth and the FG ratio. So all in all, I think Salesforce is a really, really excellent company, and it's trading at a fair price, or in my opinion, probably just below a fair price. So you're getting a solid deal. It's not a pound your fists on the table type of deal. It's not that ridiculously cheap yet. But I think if you're investing in this company today, you're probably getting a really solid price. And as long as AI isn't too disruptive to the business, you should see some really solid returns in the future. So with that, one last reminder as a final disclaimer, I do own this stock, but none of what I've said in this video is shaped by that. I genuinely just reviewed the numbers and try to give my most unbiased thoughts and opinions. And as always, these are just thoughts and opinions. They are not financial advice, so please do your own research. But with that, thank you so much for making it to the end of the video. If you have not already, please like the video and subscribe to my channel, as it really, really helps me out as a small creator. And I hope to see you in the next video soon. Hope you guys have a great day. Bye.